Okay, this is a continuation of problem P2-2A found in your text. We did the transactions from May 1st through May 17th in part 1. We're just going to finish up with the transactions for May 31st. There's only 2 left to record. So on May 31st, we paid the secretary receptionist $2,000 salary for the month. Okay, I'm paying the secretary $2,000. That means cash is being decreased. If I want to decrease cash, which is an asset, I will credit it. Right? An increase to an asset account would be a debit, and the reverse would be a credit. So I'll record that credit first, the cash of $2,000 being reduced. My cash account is being reduced by that. And the debit will be an expense because I'm incurring this expense, this salary. I've paid the secretary salary, and so I want to record that salary expense. Expense would be, if I want to increase an expense account, it will be a debit. Right, so salary expense is a debit of $2,000. So that's that one entry. And then the last entry, we paid 40% of the balance due Reed Supply Company. If we go up to the May 3rd transaction where we purchased 2,500 of supplies on account from Reed Supply Company, well, now I'm going to pay them 40%, and that may be the terms of our contract. If I take 40% of that 2,500, I come up with $1,000. So I'm paying them $1,000. Again, I'm affecting cash. So I'm going to credit my cash account for 40% of what I owe Reed, which turns out to be $1,000. So I'll credit cash for $1,000. And then I want to remove the fact that I don't owe Reed the 2,500 anymore. I owe them 2,500 minus the 1,000, right? So I want to remove from accounts payable that I have this $1,000 that I paid them. So once I affect my accounts payable account by this $1,000, accounts payable is a liability. I'm removing that I owe Reed Company $1,000 anymore because I've paid them the $1,000. Okay, so there's that transaction. Accounts payable is credited for $1,000. Accounts payable is debited for $1,000. Cash is credited for $1,000. Okay, so that's journalizing the transactions. Now I want to post them. Off to the side here, I have my T accounts. And one by one, I'm going to go through these transactions and post them to the T accounts. If you printed out what I had posted out on Ocean Cruiser under Chapter 2, I posted worksheets for this, and you'll have the 3-column ledger balances that you'll post these transactions to. Okay, so let's see. My first transaction was a debit to cash of $25,000 and a credit to capital of $25,000. So let me go down here and record that. So I have a debit of $25,000 cash. Debits are on the left side of the T accounts, right? Remember that. And then my capital account, I credited my capital account on that first transaction of $25,000. Okay, that was transaction 1. Let's go up. Transaction May 2nd, there was no entry to record, so I don't have to post anything there. May 3rd, I'm debiting supplies for $2,500. I'm crediting accounts payable for $2,500. So let me go down to my ledger. I'm going to post this now. So I'm going to, where's my supply account? Okay, here's my supplies. I'm debiting supplies by the $2,500, and I'm crediting accounts payable for the $2,500. Okay, I'm posting it to the ledger accounts, these transactions. All right, that was May 3rd. Let's look at May 7th. I'm debiting rent expense by $900, crediting cash for $900. So let me go down, cash is going to be credited by 900, and my rent expense will be, um, where's my rent expense? There's my rent expense account, and I'm going to debit it for the $900. I'm just recording it in T accounts. Like I said, if you printed out what I had out there on Ocean Cruiser, you'll have the three column form of the T account, which is used in practice. Okay, May 11th. I'm debiting accounts receivable by 2,100, and I'm crediting service revenue by 2,100. So let's see, I have my accounts right here. So accounts receivable is going to be debited in this transaction, 2,100. I'll post it, and then my service revenue will be credited by 2,100. All right, the next transaction, May 12th, we debited cash, right up here. We debited cash by 3,500, and we credited unearned revenue by 3,500. So in my cash account, I want to post this debit of 3,500, and then I want to find my unearned revenue account, my unearned revenue T account, and it's further down. And here it is. So I'll credit it by 3,500. Okay, so I posted that. Let's see, May 17th, we have cash, a debit of 1,200. I'll go and post that. And we credited service revenue for 1,200, so I want to post that. Okay. On May 31st, we debited salary expense for 2,000 and credited cash for 2,000. So salary expense is going to be debited for $2,000, and I want to post this transaction to cash, which would be a credit of 2,000 to my cash account. All right, on May 31st, we also debited accounts payable by 1,000, and we credited cash for 1,000. So let's see, my accounts payable is going to be debited by 1,000. Oh, I'm sorry. Right, I'll debit accounts payable by 1,000, and then I want to credit my cash by 1,000. Right, I'm posting these to the ledger. I have the journalized transactions now. I'm posting them to a ledger. Now I want to get my account balances as of the end of May 31st. So in my cash account, I'm going to total up all my debits, and I will subtract out from it all my credits, and I should get a debit balance when I do that of 25,800. My accounts receivable, I only have one transaction there. My balance is 2,100. Same thing with supplies, right? My balance in my supply account is 2,500. There's only one transaction there. Let's look at accounts payable. I have a debit of 1,000. I have a credit of 2,500. The balance that I owe Reed, remember that was who we bought the supplies from, will be the net of those two, and since credits are larger, the balance in the accounts payable account will be 1,500. It's the net of the two, right? Do you see that? The 2,500 credit less the 1,000 debit gives me a balance in my accounts payable of 1,500, and that is what I currently owe Reed. All right, unearned revenue, all we had was that one transaction of 3,500. Capital account, again, all we have is that one transaction, so that's our balance. Service revenue, I have a credit of 2,100, another credit of 1,200. If I add them together, I should have a credit now of 3,300. That's the balance in my service revenue account as of May 31st. And then finally, my expense accounts, 2,000. salary expense, that's the balance. Rent expense has a balance of 900. Okay, we're going to stop now before we create our trial balance, and that'll be in part 3.